Hey guys, I hope you started your Saturday morning on a high note. So I hope you're gonna have an amazing weekend. But what I wanted to do this short video on is to talk about the strategy that Diamond Property Group recommends to our clients. Okay, I understand and I completely respect the fact that there are different ways to skin the cat. Okay, so for example, there are property investors that only buy for the cash flow. Okay, they make sure that their gross rental yield is no less than 7%, and they generally acquire more than 10 investment properties. Okay, now our strategy for most of our clients is not like that. Okay, so what we focus on, we need two things when it comes to property investment. There are different types of returns. One is the rental yield and two is the capital gain. So let's talk about the capital gains. What we want is we want the value of your property investment to double, okay, over the next 7 to 10 years. And according to the statistics over the last 60 years, this is what has been happening in New Zealand. So the numbers are on our side, which is fantastic. So all we need to do is invest into the location that provides strong rental demand. It's got very strong job market, great amenities, schools, and bigger cities with the population constantly growing. So Auckland and Hamilton, in my view, match those criteria perfectly. So that's the markets we mainly focus on, Auckland and Hamilton. However, in Auckland, the average rental yield is about 2.9% or 3%. So if you buy a property with such low rental yield, you're gonna have to top up $300 to $400 a week. And let's face it, who can do that? Not many people can do that. And even if you could top up $400 a week, that's not a very good investment. So the second part of the property investment strategy that we look at is the cash flow. The most important thing is it needs to be affordable, all right? So for some people, it means the cash flow needs to be positive. So the property actually needs to generate them income. Otherwise, they can't even get finance. And for those, we'll definitely work hard and we'll try to accommodate that, and we'll find them cash flow positive rental properties in Auckland or Hamilton. However, for most people, it just needs to be affordable, meaning that your personal top-up is not going to be more than $50 a week. So if you look at the return of investing $50 of your own money into property and seeing that over the next 10 years, the property is gonna double. So let's say today you buy something for $600,000, 10 years later it's worth $1.2 million. It's a pretty good return, don't you think? So that's what's important to us. It's the strong capital gains and it's affordable cash flow that matches your lifestyle and that fits your budget. All right, and what I'll do in the next video is I will go over the pros and cons of strategy where the investors are looking for cash flow returns of 8 to 10%, and I'll tell you what sort of properties they are, okay, and whether they are actually for you. All right, have a great Saturday and I'll chat to you later. Bye.